All right, let's dive in. Today, we're taking a deep dive into Rossari Biotech, a major player in India's chemical manufacturing scene.
That's right, a major player.
And get this, they've developed over 4,282 products. That's a lot of chemistry going on.
It is.
We're going to be using their recent annual report and public filings to really understand what's driving their growth, the risks they face, and their plans going forward. Kind of like our game plan for this deep dive, right?
Exactly. And it's not just the sheer volume of products that's interesting, it's the range of sectors they operate in.
Absolutely.
From specialty and performance chemicals to animal health and nutrition. I mean, they're not just making chemicals.
No.
They're really crafting solutions for a really diverse group of clients.
That's a great point. They work with, like, massive FMCG companies.
They do.
But then they also have, like, these niche ceramic producers.
Yeah.
And even some stuff in the pet care industry.
Yeah, quite a mix.
It's a pretty wild mix. But before we get into the specifics of Rossari's business, I think it's helpful to zoom out and look at the big picture, like the overall industry.
Oh, great.
The global specialty chemicals market, it's on a pretty serious upswing right now.
Oh, it is. Projections show it hitting US $14.32 billion in 2024, and it doesn't stop there.
No.
And Rossari, very strategically positioned within some of the fastest growing segments, like take the ethoxylates market.
Okay.
Projected to reach a whopping US $17.47 billion by 2033.
Now, for those of us who maybe didn't ace organic chemistry, what exactly are ethoxylates?
Okay, so think of them as like the unsung heroes of so many products you use every day. Detergents, cosmetics, even agricultural products. They're everywhere.
So pretty versatile.
Very versatile. And that versatility, that's a key driver of this market's projected growth.
Got it. So Rossari's right there in the middle of this huge potential.
Front row seat.
Front row seat to this growth. And it's not just ethoxylates. You look at India's textile industry.
Massive.
A major market for Rossari.
It is.
That's also expected to see really impressive growth. Like, I think they were saying an 11% CAGR between 2023 and 2028.
Yeah, that's significant.
That's big.
That's big growth. And then let's not forget the home and personal care market.
Right.
Everything from your laundry detergent to the latest skincare must-have.
All that good stuff.
This market's projected to grow even faster. I mean, we're talking a CAGR of 14.81% between 2024 and 2033.
So we're seeing these massive numbers. And Rossari, they're operating in these, like, high-growth spaces. But, of course, their success isn't guaranteed.
Of course not, no.
How do they actually stack up in these markets?
Well, they've done a great job carving out their niche, thanks in part to their diverse product portfolio. And, you know, they've shown a commitment to innovation, which is vital in this market.
Yeah, their annual report talks about that customer centricity.
Right.
You think that plays a role in their success?
Absolutely. The chemical industry, it's not just about churning out products anymore. Building strong relationships with your customers, understanding their needs, that's essential.
Makes sense. All right, so we've gotten a sense of the industry landscape where Rossari fits in. But let's zoom in a little bit now.
Okay. Yeah.
How do they actually operate? What's their business model like?
So their model, it's all about providing these tailored solutions.
Okay.
They serve a wide range of industries, as we've said, and they do it with this diverse portfolio of product groups. I mean, we're talking everything from soaps and detergents to paints and coatings to additives for animal feed and pet care products.
They even do stuff for digital printing on fabric.
Oh, yeah, yeah.
Which I was like, that's pretty cool.
That is pretty cool. And they're really pushing the boundaries of what's possible with specialty chemicals.
Yeah.
And that constant innovation, I mean, it's a key part of their model, a major driver of their growth. It lets them tap into new markets, create value for a wider range of customers.
So how do they actually make money? Is it all just direct sales of these products?
Mostly, yes. Direct sales are a big part of their revenue.
Okay.
But they also generate income through commissions.
Okay.
Even benefit from some export incentives.
So it's not just a one-size-fits-all revenue model.
No, it's diversified, which is a good thing.
Makes them a little bit more resilient.
Exactly. If one sector weakens, the others can help soften the blow.
That's good to have.
It is.
Now, their annual report highlights some key figures in their leadership. We've got Edward Meneses as the executive chairman and Sunil Chari as the managing director.
Yeah.
And both of these guys have been with the company for over 25 years.
Yeah, that's quite a tenure, isn't it? I mean, Chari's experience in the chemical industry goes even further, over 3 decades.
So that could be seen as like a double-edged sword in a way, right?
It could. It definitely brings this deep knowledge of the industry, its cycles, its challenges. But there's always that question, can they adapt, embrace new ideas in such a fast-changing industry?
Yeah, it's that balance of experience and agility.
Exactly.
But, their track record speaks for itself.
It does.
They've steered the company through quite a bit, and they've managed to achieve some pretty impressive growth.
They have, absolutely. Their leadership's played a huge role in Rossari's success. But it's always good to consider all the angles when you're looking at leadership, especially in an industry like this.
Absolutely.
Mm-hmm.
Okay, so we've talked about the industry landscape. We've talked about Rossari's business model. We've even touched on the leadership a bit. But let's get to the heart of their recent performance, their financials.
Yeah, the numbers. Let's take a look. Let's see how they're navigating this, kind of complex economic environment we're in.
Right. So how are they holding up?
Well, despite those challenges, Rossari is showing steady growth.
Okay.
Their latest quarterly results, they show a 10.5% increase in revenue, bringing them to a total of $18,305.58 million.
Okay, so that's a good sign. But revenue, it's only part of the story.
Right.
What about their profitability? How do we measure that?
That's where EBITDA comes in. Earnings before interest, taxes, depreciation, and amortization. It really gives us a clear picture of their operating profit, how much they're making from their core business operations.
Okay, and how do their EBITDA look?
Also, healthy growth, up 12%, reaching $2,497.55 million, suggests they're managing those operating costs well and generating decent profits from those core activities.
Okay, so positive numbers. But what do they really tell us? I mean, to get the full picture, we have to dig a little deeper, right?
Absolutely. We need to compare these figures, see how they stack up against industry benchmarks, see how they're doing compared to their competitors. That gives us a more complete view of their financial health.
Makes sense.
Yeah. All right, so we've gotten a good overview of the industry and Rossari's place in it. But let's dive into the numbers a little bit more.
Yeah, let's get into those financial statements.
Exactly. Those can be really revealing,
They can, and sometimes a little intimidating, but
They can be.
But they tell a story.
They do. They absolutely do. And I think a good place to start is always the profit and loss statement. You often hear it called the P&L.
Right, the P&L.
Basically a summary of the company's revenue, expenses, and ultimately their profit or loss over a specific period.
So it shows us how much money they're bringing in, how much they're spending, and what's left over.
Yeah, exactly. And looking at Rossari's latest P&L, you see a revenue of $18,305.58 million, a 10.5% increase year over year.
We talked about that revenue growth earlier. Pretty impressive. But revenue's only one piece of the puzzle, right?
Right.
What about their profitability?
So the P&L also breaks down those expenses, right? Including the cost of goods sold, which tells us how much it costs them to produce the products they sell. And from there, you subtract things like operating expenses, salaries, marketing, admin costs. And that brings us to a key metric, EBITDA.
Okay, EBITDA, you mentioned that before.
I did.
Can you remind us what that stands for and why it's so important?
Yeah, so EBITDA, it stands for earnings before interest, taxes, depreciation, and amortization. And it's a really widely used measure of a company's operating profit. Kind of gives us a sense of their core earnings power before we start factoring in things like debt financing and asset depreciation.
So it helps us see how efficiently they're running their core business.
Exactly. And Rossari's EBITDA, it also saw a healthy growth, up 12%, reaching $2,497.55 million.
Okay.
Yeah.
So the P&L, it gives us a snapshot, but we need to look at the balance sheet and a cash flow statement to really get that complete picture of their financial health, right?
Oh, absolutely. The balance sheet, it's like a snapshot in time of their assets, liabilities, and equity. Basically tells us what Rossari owns, what they owe, and the value of the company that belongs to its shareholders.
So it's kind of like a financial checkup in a way, right? It shows us how strong they are.
It does. It does. And, one of the key things you look for on a balance sheet, obviously, is their assets. And for Rossari, you see they have significant investments in property, plant, and equipment. Think manufacturing facilities, physical assets.
Makes sense.
They also hold investments and, of course, a certain amount of cash and cash equivalents for short-term needs.
Right. Got to have cash on hand.
You do. And then on the flip side, you have their liabilities, the money they owe to various parties. So that includes, borrowings, lease obligations, payments they need to make to suppliers, things like that.
Right. And by looking at the assets and liabilities, we can get a sense of their stability, the potential risks.
Yeah, and one key ratio that a lot of analysts use to kind of assess this is the debt-to-equity ratio.
Okay.
It compares how much they've borrowed, their level of debt to the value of their shareholders' equity.
So a higher debt-to-equity ratio, that could be a sign that they're relying a lot on borrowed money.
It could be. And while some debt is normal for businesses, especially those growing, a high ratio can sometimes raise those red flags about financial risk.
Yeah, it makes them potentially more vulnerable, right, to like economic downturns or interest rate hikes.
Exactly.
Makes sense. Okay, so we've talked about the balance sheet. What about the cash flow statement? What does that tell us?
So the CAPTE statement, it's all about tracking the movement of cash, both in and out of the company. And it really gives us a clear picture of how they're generating and using their cash, which is crucial for understanding, their short-term liquidity, their ability to fund things like future investments and growth.
Okay, so it's like following the money trail.
It is. It is. And the cash flow statement, it's typically broken down into three main sections: operating activities, investing activities, and financing activities.
Okay, break those down for me.
All right. So operating activities, those focus on the cash flow that comes from, their core business operations. So cash they receive from customers, cash they pay out to suppliers and employees, basically the cash generated or used in their day-to-day activities.
Right, so like how much cash their core operations are actually generating separate from some of those accounting entries.
Exactly. And then investing activities, that section tracks cash flow related to, investing in long-term assets. So buying new equipment, upgrading facilities, acquiring other companies.
Cool move.
Big moves, exactly. And finally, financing activities, that's all about the cash flow related to raising capital and managing their financial structure. So issuing stock, taking on debt, paying dividends to shareholders, or even buying back their own shares.
Got it. So by analyzing that statement, we can see how well they're managing that cash, making sure they have enough to cover those short-term obligations, fund growth, and keep their investors happy.
Exactly. Even a profitable company can run into trouble if they don't have enough cash on hand to keep things running smoothly.
Cash is king, right?
It really is, especially in a dynamic industry like this.
Absolutely. Okay, so we've touched on the three core financial statements: the P&L, the balance sheet, and the cash flow statement. But you mentioned financial ratios earlier.
I did.
Why are those so important when we're analyzing a company?
They're really powerful tools. They allow us to compare different elements of the financials and, spot those trends, strengths, potential weaknesses that might not be obvious just by looking at the raw numbers.
So it's about going deeper than just the surface level.
It is. It is. It helps us tell the story behind those numbers.
Okay, so can you give us some examples of like key ratios that we should be paying attention to, and what do they tell us about Rossari's performance?
Yeah, so one important ratio is the gross profit margin, and that measures the profitability of their products or services after deducting the direct cost of production.
So essentially how much they're making on each unit of their product that they sell.
Exactly. And a higher gross profit margin usually suggests better cost control and stronger pricing power.
All right, so it means they're running a tighter ship.
Yeah, exactly.
Okay, what are some other key ratios to consider?
We talked about the debt-to-equity ratio earlier. It kind of gives us a sense of, their financial leverage, the risk. And a high ratio there could mean they're relying a lot on borrowed money, which can make them more vulnerable to, things like economic downturns.
Right. Finding that right balance between debt and equity, that's crucial.
It is. Another important one is the current ratio. That compares their current assets to their current liabilities.
Okay.
And that ratio basically tells us how well equipped they are to handle those short-term financial obligations.
So it's a measure of how easily they can cover their immediate bills and expenses.
Exactly. It's all about their short-term liquidity. And if that current ratio is too low, well, it could mean they might struggle to pay those bills on time, which obviously could lead to problems.
Right. So by looking at these ratios and how they change over time, or even comparing them to other companies in the same industry, we can get a much clearer understanding of how they're doing.
We can spot those red flags early.
Right, exactly.
Yeah.
Okay, we've gone to the financials in quite a bit of detail, but behind every company, there are people, right, making decisions, driving that. Let's talk about the people behind the numbers, the promoters and management team.
Yeah, good point. We touched on Edward Meneses earlier, the executive chairman,
Right.
Sunil Chari, the managing director, and we know their experience and leadership, they've been huge factors in Rossari's journey so far.
Absolutely. 50-plus years of combined experience, that's impressive.
It is.
But who else makes up that leadership team?
Well, the annual report actually breaks down their board of directors and those key managerial personnel. And you see this, this mix of individuals with expertise in all different areas: finance, operations, research and development, marketing, you name it, they've got it covered.
That diversity, that's important, right?
Yeah.
To handle a business as complex as this, especially in such a dynamic industry.
Absolutely. You need those different perspectives, those different skill sets to navigate those challenges. And when we evaluate a management team, it's not just about, their resumes.
Right.
We also want to look at their track record, what kind of leaders are they, and do their values align with the company's overall vision?
Because at the end of the day, they're the ones making those big decisions.
They are. They're the ones setting the tone, driving those day-to-day operations.
Absolutely. And speaking of evaluating leadership, you mentioned stakeholder holding changes before. Can you remind us what those are and why they're important?
Yeah, so when we talk about stakeholders, we're not just talking about shareholders. It's a broader group. It's anyone who has a vested interest in the company, employees, customers, suppliers, even the community they operate in.
Okay, so it's about everyone who's impacted by the company's actions.
Exactly. Right. And so those stakeholder holding changes, those refer to any shifts in ownership or influence among those different groups. And tracking those changes can actually be really insightful.
In what way?
Well, they can kind of give us a clue as to the sentiment towards the company. Like if you see a lot of insider buying of stock, that could signal that those closest to the company, they're feeling really good about the future.
So like they're putting their money where their mouth is.
Exactly. But on the other hand, if you see a lot of selling by, top executives or those big institutional investors, that might be a cause for concern, might warrant a closer look.
Right, like are they jumping ship?
Exactly.
So it's like looking for those patterns of behavior, right?
Yeah, it is.
That can reveal what's really going on.
It can. And speaking of getting that deeper understanding, one really valuable document is the management discussion and analysis. You'll often see it called the MD&A section in their annual report.
Okay, and what can we find in there?
So the MD&A, that's where the management really lays out their perspective on the company's performance. What are the challenges? What are the opportunities? They usually cover a wide range of topics: an overview of the industry, key performance indicators, a discussion of risks and uncertainties, and, they give that forward-looking view of their strategies and plans.
So we can get a sense of what they're thinking, how they're making decisions, and where they see the company going.
Exactly. And the MD&A can be really helpful in providing that context. What's the story behind the numbers? What's the why behind the what?
Makes sense. Okay, so we've covered the financials, we've looked at the leadership, we even got some insight from their management's perspective. But no business operates in a bubble, right?
Right.
There are always external factors that can come into play. So what are some of the business risks that Rossari faces?
Great question. And every company, no matter how successful, faces its own unique set of challenges and uncertainties. And Rossari's annual report, especially that MD&A section, it does a good job of highlighting some of the key risks they've identified.
What are some of the big ones?
Well, one of the most prominent risks for any company in this industry is, of course, competition.
Right. It's a competitive market.
It is. The global chemical market is incredibly competitive. Everyone's vying for market share. So Rossari has to constantly innovate, differentiate those products, and keep those prices competitive.
Makes sense. Can't afford to stand still in this industry.
You can't. Things are always changing, new technologies, new products. Another big one is the volatility of raw material prices and availability. The chemical industry, it relies heavily on raw materials, and any kind of disruption to that supply chain can really hit their production costs and their bottom line.
Yeah, we've seen how fragile those supply chains can be.
We have. Whether it's geopolitical instability, natural disasters, or even pandemics, those can all have a huge impact.
Right. So they really need to be on top of their sourcing strategies, build those relationships with suppliers, and have like backup plans in place.
Exactly. Supply chain management is crucial.
Absolutely.
Yeah.
What about other external factors? What else could potentially impact their performance?
Regulatory risks, that's another big one. The chemical industry is highly regulated, both in India and globally. We're talking stringent rules around safety, health, environmental protection, product labeling, you name it.
And those regulations, They're constantly changing, too.
They are. It can be a real headache for companies to keep up and ensure they're in compliance.
Because the consequences can be pretty serious, right?
Oh, absolutely. Fines, lawsuits, damage to their reputation. You don't want to mess with that.
You don't.
Yeah.
And with this increasing awareness of sustainability and, ethical practices,
Right.
are there any reputational risks for Rossari?
Definitely. Consumers are more aware than ever, and they're demanding products from companies that align with their values.
Right.
And investors, they're scrutinizing companies' environmental and social practices more closely. So any missteps there, any controversies, those could really damage Rossari's reputation.
Right, because it's not just about avoiding those fines and penalties, it's about building trust.
It is. It's about maintaining a positive image.
Right. Okay, so those are some of the external risks.
Right.
But what about internally? Are there any weaknesses, vulnerabilities within Rossari that could hold them back?
So one thing that stands out is their reliance on a limited number of key customers.
Right.
Their annual report shows that a big chunk of their revenue comes from a pretty small number of large clients.
Okay.
So if they were to lose one or more of those big clients, it could have a significant impact.
Yeah, that would be a big hit. So diversifying that customer base, that might be something they need to focus on.
Exactly, spreading that risk a little bit. Another potential risk is talent,
Right.
Attracting and keeping those skilled chemists, engineers, all those specialists they need. If they can't find and keep those people, that could really hinder their growth and innovation.
Absolutely. People are a company's most valuable asset, right?
Right.
Especially in an industry like this.
They are. And then, of course, you can't forget about technology.
Right.
The chemical industry, it's embracing those digital technologies, automation, all of that. Rossari needs to stay ahead of the curve there.
Yeah, falling behind could put them at a real disadvantage.
It could.
So managing risk is one thing, but it's also about adapting and evolving to stay relevant.
It is. You got to keep up with the times.
Okay, so we've talked about those risks and challenges, but now let's shift gears a little bit. Look towards the future.
Okay.
What does Rossari's leadership have to say about their plans and their strategies for the future?
Well, their annual report, other public statements they've made, those give us some pretty good clues. And it's clear that they're not just sitting back. They're actively trying to shape their future.
Good to hear. So what are some of the key elements of that plan?
Well, expansion is a big one. They're looking to ramp up that production capacity, introduce new product lines, and move into new markets, new geographies.
Right. And we already mentioned their presence in Bangladesh.
We did.
And it seems like they're looking at even more international expansion.
They are. They're not just content with serving the domestic market anymore. They want to be a global player.
It's ambitious.
It is. And along with that expansion, innovation is another core focus. They're putting a lot of money into research and development, coming up with those innovative and sustainable solutions. You mentioned the biosurfactants earlier, and they're really pushing the boundaries there.
Right. That's a good example of their commitment to sustainability as well.
It is. And the sustainability initiatives, it's not just about, checking boxes.
No.
They're really trying to integrate those practices into everything they do.
It's becoming part of their DNA.
It is.
That's good to see. Okay, so expansion, innovation, those are big parts of their plan. But they're also thinking about operational efficiency, right? Managing costs.
Oh, absolutely. In today's competitive market, you can't just have great products. You got to be able to produce and deliver them efficiently. So they're streamlining those operations, optimizing their supply chain, embracing those digital technologies.
So they're trying to work smarter, not just harder.
Exactly.
Okay, so we've got expansion, innovation, operational excellence.
Right.
And, of course, their commitment to sustainability. Seems like a pretty well-rounded approach. But how realistic are their goals?
That's the million-dollar question. It's going to depend on a lot of factors, both internal and external. Internally, they need to be able to execute those strategies, manage those costs, keep those talented people, and keep that innovative spirit alive.
So a lot of internal challenges to overcome.
There are. And then, of course, you have the external factors. Things like, global economic conditions, regulatory changes, geopolitical events, the competitive landscape. It's a lot to juggle.
It is. So it sounds like their future is bright, but it's not without its hurdles.
Yeah, that's a good way to put it. They've got a lot going for them, but they'll need to be agile. They'll need to adapt to stay ahead.
Absolutely. Okay, so in this deep dive, we've really gone in depth on Rossari's business model, their financials, the leadership, the risks they face, and the strategies they're using to move forward. Now, in our last segment, let's take a step back
Okay.
And think about what this all means in a bigger context. What does Rossari's story tell us about the state of the chemical industry
Yeah.
and the future of manufacturing in India?
Interesting question. We'll get into that. Stay tuned.
Yeah. Welcome back to our deep dive into Rossari Biotech. We've spent some time really digging into their story, and they've got some impressive numbers, some ambitious plans. But I think it's also important to take a step back, look at the bigger picture here. What does Rossari's journey tell us about the chemical industry as a whole?
Well, I think it really highlights the shift we're seeing towards specialization and innovation in the sector.
Right.
They're not just making bulk chemicals, they're really crafting these tailored solutions, meeting specific needs across all kinds of different industries. It's a much more knowledge-intensive approach.
Yeah, it's about making things better, smarter, not just more. And their focus on sustainability, that's a big deal too.
Oh, absolutely. It shows that Indian companies, they're not just following global trends, they're helping to shape them.
Like with those biosurfactants we were talking about earlier.
Exactly. That's real commitment to innovation that's good for the environment. And that kind of aligns with, with what consumers are demanding, what regulations are pushing for.
Makes sense. If you're not on board with sustainability these days, you're going to get left behind.
You will.
So this isn't just about one company's success.
Yeah.
It's like a window into the future of the whole chemical industry.
I think so. It reflects this broader transformation in Indian manufacturing as a whole, really.
Interesting.
They're not just competing on price anymore.
No.
They're becoming known for their quality, innovation, commitment to sustainability.
Yeah.
That shift towards global competitiveness, that's huge for India.
Absolutely. And they're moving to Bangladesh. That's a good example of that.
It is. They're not afraid to go out there and compete on the world stage.
Yeah.
And their success so far shows they can do it.
Yeah. It's pretty impressive. But we've also seen they face some real challenges.
Of course.
The competition is fierce. The regulations are moving target. Getting those resources can be tricky. And attracting and keeping the right people, that's essential.
It is, but I think those are challenges they can overcome. I mean, they've got the track record, the leadership. They've shown they can adapt.
Right.
So it'll come down to how well they can, balance those internal factors, execution, managing costs with the external pressures, the economy, regulations, the competition.
It's a lot to handle.
It is. But I think they're up for the challenge. It'll be fascinating to see how they navigate this, evolving landscape in the years to come.
Absolutely. Well, I think we've covered a lot of ground here. We've really taken a deep dive into Rossari, looked at them from all angles. But as always, we want to leave you with something to think about.
All right, what have we got?
So we've seen how Rossari is strategically positioning itself in these high-growth markets, ethoxylates, textile chemicals, home care, even animal health. But markets change.
They do, constantly.
So the question is, what are the trends, the technologies, maybe even disruptions that could shake things up in the next 5-10 years? And how would Rossari have to adapt to stay ahead?
That's a great question. This industry, it never sits still. New technologies, new consumer demands, new regulations. If you can't anticipate and adapt, you're going to fall behind.
It's all about being proactive.
It is. So do your research, keep learning. This is a fascinating world, and it's always changing.
Couldn't agree more. Well, that's about all the time we have for our deep dive into Rossari Biotech.
Great discussion.
Hope you enjoyed it. And as always, keep those brains buzzing. We'll see you next time.